You don't want that tax refund. You really don't. I know you're probably thinking, Carla, what are you talking about? When you get a tax refund, you know what it means? It means the government has been holding on to your money all throughout the year. That's right. They are essentially giving themselves a tax-free loan with your hard-earned money. So why should you allow them to do that? In this video, I am going to break down why receiving a tax refund is a bad idea and how you can avoid overpaying Uncle Sam all year long and keep your money in your pocket. Before we jump in, don't forget to like, comment, and subscribe so you don't miss out on any business-changing information. And if you stay until the end, I will tell you exactly what you need to do to make sure you don't give IRS an interest-free loan. Now, let's get after it. The federal income tax system, people, is a pay-as-you-go system. That means taxpayers pay their taxes as they earn their money throughout the year. You can avoid a surprise at tax time by literally periodically checking your withholding amount. W-2 wage earners and those who receive pensions and annuities, you should check your withholding every single year. Here's what to know about withholding and checking it out, and it's really important. Understanding that tax withholding and your employer generally withholds income tax from your paycheck. That's what happens. They take that income tax and then they pay it over to the IRS. At the end of the year, you get your W-2 form that shows how much money you made, how much tax was withheld, how much state tax was withheld, and then you're going to report that on your tax return. But here's the thing. You need to literally determine how much tax should be withheld. The amount of income earned and your deductions really determine that. That's why it's so important that you look at filing a W-4 form every single year. Update that withholding certificate with your employer so you are never over withheld. Employees, you literally must specify the amount of withholding every single year. Whether you're single, head of household, how many deductions you're claiming, you want to make sure you check that out, because over withholding your income taxes is not a good idea, because that means that you could have had that money all year long, but now IRS is holding on to your money and you're waiting on IRS to give it back to you. IRS recommends that you check your withholding twice a year, and they are asking employers to now issue you a new W-4 form and to make sure their refunds are getting smaller. IRS does not want to issue back refunds. They're not in the refund business. They literally want our tax bills to be even Steven, meaning that when you file your tax return, exactly what you're supposed to owe them is exactly what you actually pay them. No more, no less. But when you end up having life events that occur, such as a new child being born and things like that, you gotta double check your withholdings. When there are tax law changes that affects taxpayers, you wanna check your withholdings. When there's lifestyle changes, for example, maybe you bought a house, maybe you got married, maybe you got divorced. These are all life changes that require you to check your withholding. When there is a change in your income, as an example, you want to check your withholding. Perhaps your spouse wasn't working. Now your spouse has gone to work. Now you have a 2-household earner. You want to check your withholdings because you may be under withheld or over withheld. Also, if you have taxable income that is subject to self-employment tax, you want to make sure you check your withholdings because you really could be in trouble. You also want to look for withholdings on capital gains, withholdings on interest income, things that there's not an automatic withholding for. You got to make sure you're checking it out. And when you're reviewing these deductions, you want to take into consideration all of your credits, your child care credit, your earned income credit. You want to look at all of your deductions, and you want to make sure that your withholdings are correct in the aggregate, not just looking at the amount of income you make, but you also have to look at the deductions that you're going to take. Many of you can go and use the tax withholding estimator tool at irs.gov. It's not going to be often that I am going to tell you to go to irs.gov, but they have a withholding estimator tool that you can go on their website to utilize, and it will really help you estimate your withholdings. If you are someone that is getting a pension, for example, and you're not employed by someone else, you are responsible for turning in a W-4P with the people that pay your pension to change your withholdings. So even if you're getting that retirement money coming in, you also want to check your withholdings with them as well. Taxpayers with complex tax situations may need to use a tax professional instead of the withholding calculator. Sometimes it makes sense to pay people. This includes employees and individuals that have alternative minimum tax, unearned income from dependents. If your kids are out there making money, it can also help those who receive non-wage income, such as dividends, capital gains, royalties, rent. You definitely want to check it out. Use the worksheets and the various examples that are online that can really help you so you are not over withheld. If you need to change your withholdings, remember you change your withholdings by using a form W-4 if you're a wage earner, or if you are a retiree, you're going to use a form W-4P. If you are self-employed and you are making your estimated tax payments, you want to make sure you're running live calculations. Most of us are paying our estimated tax payments based off last year's income tax return. And that may be great, except for it may not be correct. Remember, refunds can cost you money and time. You could have your money all year long versus waiting on it from IRS. If you have your refund all year, you can pay down your credit cards. You can maybe make an extra payment on your car payment. You can put money aside to retirement. You can put money in savings and earn interest on it. If IRS is holding your money, you are missing out on the opportunity cost. That's a new term for you. Opportunity cost of having access to your money. Money in your hand is better than somebody owing you money. And because you had too much withheld and IRS is going to give you back your money, you're going to be waiting on your refund. What if IRS decides that they don't want to issue refunds? They halt issuing refunds. What if you become a victim of identity theft or refund fraud, right? That's going to cost you time, effort, and energy. That's why it's so important to make sure that you get your money all year, get away from dealing with refunds, and put your cash in your pocket right now. I know this is alarming when you hear me say don't get refunds, but this is where the game changes. This is where you have to level up your knowledge and realize that refunds are not for those people that are trying to build wealth. Refunds are not for those people that are trying to be financially savvy. You can control your own money. And realize our government is not giving us anything extra. If you are earning the earned income credit, for example, you can still get that all year long and not wait until the end of the year. So this is a mindset shift. This is a game changer. This is leveling up your financial knowledge. And here's the thing, people, when you know better, you absolutely have to do better. I can guarantee you that the wealthy people are not waiting on tax refunds. So you got to start playing a higher level game and realize tax season is not a gift to get your own money. This is an opportunity for you to educate yourself. That is why I want you to like, comment, and subscribe so I can continue to update you on all things tax.